All right, good morning, Alta Realty Group agents. This is Kevin Lauren. I'm the Director of Training and Marketing. And today we are going to go over reverse mortgages with Candice Nelson from AAG. Let me bring Candice on the line. One sec. All right, good morning, Candice. Can you hear us?
Good morning, I'm here.
All right, perfect.
Can you hear me as well?
Absolutely, sounds great.
Wonderful.
All right, cool. Let me grab Bill Seitz, our liaison to Clearview Mortgage, CEO of Clearview. And good morning, Bill.
Good morning, Kevin. Good morning, Candace.
Good morning. Good morning, Bill.
Good morning, Candace.
Great day for a webinar.
Of course, yeah. Now we got all the technical connections are here. We're good.
Yeah, absolutely. And so first, Candace, before we get into your presentation, I just first want to, we had a really nice single property website produced by one of our agents, Joanna Belicana. And so I just wanted to pull that up real quick. She did a great job, and I just want to use it as an example. So one second, let me bring that up. So this is Joanna Belicana's new listing. And you'll notice that she's basically done everything correctly. So the single property website pops up with a nice pop-up. You can click it off. So it's not forcing anybody to, put in their information, but you're asking, which is good. So the other thing that I want to point out is she has uploaded at least one high definition image. Notice that this image, again, when the images get pulled from the MLS, from our agent marketing system, it will not pull over high definition images. So you have to add at least one. So at least this homepage looks nice and crisp and awesome. And she's even got a drone, picture from a little bit higher up, which always looks great. And so she's done a great job there. The other thing that she did was she paid for a Matterport tour, and she has inserted her Matterport tour in here. So really, really cool stuff. The other thing that she's done is, of course, she's also, created her sign writer. So out in front, on top of her sign, on top of her for sale sign, there's a nice text writer that says, text the word Joanna sells to 79564 to get all the property details. And so people driving by, she can capture those leads as people drive by and ask for information. So I won't go too far into this, but I just wanted to use this as an example because she did such a great job. And I do see still some of the agents not uploading that high definition image, at least one. And the single property websites just look grainy, and they're not a good representation of who you are as an agent. So you really just have to upload at least one high def image, and make sure that that is in the upper left corner. And I'll show you that real quick. When you're uploading your images, you just have to make sure that whatever image you want to be in the home page is in this upper left corner. And this is an HD image. It would say not HD if it wasn't. So anyway, I don't want to go too deep into detail there, but I just wanted to bring that up so everybody is aware of that. So without further ado, Bill, anything new in mortgage land before Candace gets going?
Well, the market is crawled its way back to nearly all-time highs. So I was looking at that yesterday and talking to my brother-in-law who works over at Union Bank, and it's pretty nice to see that. That's encouraging.
Yeah, absolutely.
Before we get started with Candace, I do want to welcome Donald Lamb into the webinar. He is, I think, joining us to take a look at the company and to see what we do. And Donald, if you're in attendance, we do this every Wednesday with our agents, and Kevin provides marketing and training for the digital space. And I usually bring on some insight into finance and mortgage, and our corporate broker, Travis Breton, usually chimes in on the marketing and also compliance issues that we face day to day in our industry. So welcome to the webinar, Donald.
Yeah, good morning, Donald. He is with us, so it's great to have you.
Good.
Also, we also do have a number of our newer agents that I'm really glad to see are joining us. So welcome Ataf, welcome Florette, welcome Marie Cruz, Mark Sheriff, a lot of guys on here, a lot of regulars as usual, so welcome.
Yeah, so today, guys, I had talked a couple weeks ago about getting Candice Nelson on from AAG. And if any of you have been, seeing the TV ads with Tom Selleck, you know exactly who AAG is. And we are partners with them on the wholesale level. And Candice Nelson is our rep. And I currently have a few reverse mortgages with her. And, in doing business with AAG and getting to know Candice and building a nice professional business relationship with her, she had mentioned, Bill, are you aware of what a reverse purchase is? And to be honest, I was like, maybe I'd heard it in passing, but never really studied it, never really looked at it at length or fully understood how could be a useful instrument in selling real estate or representing my clients or providing something of value to a potential client. And I think, and you guys hear us talk about this a lot, is we're trying to provide value and educate, what are the different things that are out there in the marketplace, and especially with financing. It's something that we kind of overlook, or we just pass off to the local mortgage broker or the local lender, and we don't maybe take enough time fully understanding how important it is to know the different products that are out there, even if you're an agent. I mean, obviously it's my job day to day to do this, but it's also a good realtor, a good person, a good real estate professional will have a basic understanding of all these different tools and these different options for their clients. Because, I can tell you right now, after I've learned a little bit about it from Candice, and she'll go and explain it here in a moment, but you could get the next sale just by understanding this simple tool, because I guarantee you most people don't understand it. And, I'll raise my hand. I didn't understand it until I took the time to study it and talk to Candice. And I think it's an excellent tool. That's not going to work for everybody, but we'll let Candice get in here and go through it. So thank you, Candice, for joining us. And it's nice to have you on board. I know we went back and forth the last couple of weeks and it didn't work out, but glad to have you today.
Well, thanks for having me. And I think this is the perfect space to discuss the reverse mortgage purchase. From experience, I've been in the industry 10 years now. This is the prime product to allow our seniors, 62 and older, leverage their equity. And in this sense, with a reverse mortgage purchase, what is allowing most seniors to do in the event they're looking to either downsize or right size, it allows them to obtain a good amount of their reserves to help prepare for the remainder of their retirement. So what a reverse mortgage purchase does, it combines a reverse mortgage loan with the equity from the sale of the previous home or other savings or assets. And what the senior is doing is they're buying their next primary home in a single transaction. So regardless of how long they live in the property or what happens to the home's value, they're never locked in or trapped into a monthly mortgage payment. As long as this borrower maintains property taxes, homeowner's insurance, maintenance of the property, and of course HOAs if that's involved. The reverse mortgage is not called due until if we're in the situation where it's a married couple, it's not due until both spouses pass on. And at that point in time, the heirs to the estate, generally is the children, they're going to decide what's done with the property, whether it be sell the home for fair market value, and then the reverse mortgage lien is satisfied at that time, and the heirs walk away with the rest of the equity of the home. Or in some instances, the children may want to keep the property. And just like a traditional home loan, they have the option to refinance and keep the home, put it in their name, or should they have been left any type of life insurance or any type of asset to pay off the property free and clear, they absolutely can do so. So a reverse mortgage is a home loan, and it's only for the senior 62 and older. And in traditional cases where it's a reverse mortgage not being purchase money, there needs to be enough equity in the property for us to lend against. But in this case, with the reverse mortgage purchase, just picture it as the borrower bringing 50% to the closing table and AAG financing the other 50%.
So that's really a key thing for everyone to understand. Generally, as a rule of thumb, if the borrower can come to the closing table with 50% of the purchase price, I mean, it might fluctuate, slightly, but as a rule of thumb, right, Candace? I mean, that's about what they need to do.
Yes, correct. It's the lending limit is going to be determined by the borrower's date of birth, the youngest borrower's date of birth, because the lending limit is going to be based off of life expectancy, basically.
Right.
So
if you have a $500,000 home and they want to buy something out in, say, Palm Springs, or they didn't realize they could retire, they could sell their home here in Orange County. They've got, the house is paid off. Maybe they don't have a lot of income. Maybe it's just they're just have Social Security income, and they have maybe a small pension or a small retirement, and they're just thinking, oh my gosh, I would love to retire out in Palm Springs, or I would love to go to a different location. They can do that with the assets and putting 50% down, and then they're not, then the reverse is basically set up in that capacity.
correct. And then another key point is we're not qualifying them for principal and interest payment. So what you're going to find is majority of our senior population, when they fully retire, there's going to be a reduction of income. So from what I've seen over the years is when you have, a family making a certain amount, let's say over 100,000, but when you fully retire, if you don't have a strong pension or a 401k set aside, what you're going to find is that income is drastically reduced when you're just solely living off of Social Security income. So this is a program that allows a borrower, to qualify just based off of property taxes, homeowners insurance, revolving and installment debt, versus having to qualify for a fully amortized principal and interest payment.
Right. So that's another key point. The borrower is not being qualified for a fully amortized payment. Since it's a reverse mortgage, it's calculated differently. And they only need to show is that, they can pay the property taxes, insurance, any HOA. So that there's very little requirement for qualifying. It's based on obviously the age, 62 or older, right? And I know we talk seniors. I mean, but 62 nowadays is you're pretty young, and and most people are living active, healthy lifestyles.
Right.
So it's not like you got to send grandma into this situation. I mean, there's people that are still well and truly working, or maybe they're semi-retired, or they have a part-time job or whatever. This really applies to anybody 62 and older, and once again, they have the assets, they can get qualified fairly easy into this type of program, right, Candace?
That's correct. Absolutely. Another key factor is there is no term on a reverse mortgage. So, the borrowers are always the homeowners. Nobody else is on title of the property. Being that the reverse mortgage is truly a home loan, property taxes and homeowners insurance are always their mandatory obligation as the homeowner. And moving forward, what this has allowed many of my clients to do is actually fully retire. In my situation with my parents, they've had their reverse mortgage since 2014, but this allowed my, stepfather to, work, 2-3 hours a week if he wished, because he was working at Disneyland, driving the tram. But now it's not a requirement for him to work because they haven't trapped or continued to lock themselves into a payment for the next, 25 years of their life, which, I mean, I don't want it to sound like a morbid topic, but some of our clients may not live to pay off a fully amortized payment. So why continue to throw that money out the window?
No, it sounds like, Candace, it's buying them a little bit of freedom.
Absolutely. Absolutely. It's buying them freedom. It's buying them peace of mind,
right?
And flexibility. And my parents, it allows them to take their trips 2-3 times a year. live comfortably. Says the children, we already decided that when they pass on, we have no emotional attachment to that house. So collectively, we decided to list the home, sell it, and whatever remains, we divide amongst ourselves. FHA gives you 6 months to do so initially, to either sell the home or refinance.
So hold up real quick, Candace. So this is an FHA loan, for anybody that didn't know that. It is basically a hybrid or a specialized loan, obviously, through FHA.
It's FHA insured. So what that means is, just like a forward FHA program, you are paying into the FHA insurance pool. So, and that's continuous at the tune of 0.5% annually. But what that protects our seniors from is never being in a negative equity position. So regardless of how the market's performing, the senior will never be placed in a position to where they owe more than what the property is worth. It also protects their children from being in a situation as such as well. So for example, if, God forbid, when my parents pass and they owe more than what the home is worth, we are going to share with the servicer, hey, we want nothing to do with the home. The home is now, underwater. We're in this horrible market crash, for example. We're walking away from it. We're not responsible for any amount. FHA's insurance will cover any shortage, and there it is, it's done. But on the opposite hand, this is why, we say on average about 50% LTV. We want to retain as much equity in the property as we can to help offset for a growing balance. And then pair that with future appreciation. This is California, assuming a 2 or 4% appreciation over the years, there should be a substantial amount of equity remaining in the home.
Yeah, no, I looked at that kind of your, just for full disclosure, my parents, I'm actually doing, my parents they live out in Palm Springs, and they're actually, they've decided to move forward on a reverse mortgage. So my parents are actually doing this. They're not doing it on a purchase. They already have an existing mortgage on hand, but my dad being retired, an architect who, businesses, he doesn't have the same book of business that he has had in the past. And, he's approaching 80 years old. And so he did his research, and, we provided all the documentation for him. And he just said, hey, this does make sense for me, because I'm not, I don't like having the extra, $2,500, $3,000 all in payment, that on my back every month. He'd rather have that flexibility and that freedom to just not live that extra little stress. I mean, when you get to that point in life, you certainly don't want it. But what's nice, and I think this is the key thing, and not for just the reverse, basically, refinance into, not having the payment on the existing, but the purchase. So I just saw a statistic a couple days ago, and I don't know where I saw it, but I did see it, and I do know it's true. So we're at record levels of equity in the country. So meaning there is more equity sitting in housing, in residential housing now than there's ever been, I think, ever. And the stats were really glaring. So, this is, like I said, this is not going to fit for everybody. But when you look at, maybe so-and-so down the street, the house is paid off, and they just kind of don't know what their options are. This is a perfect thing to present to a client that would maybe consider moving, and they have a ton of equity, but maybe they don't have, super stellar income. And this gives them a lot of flexibility. I mean, it's really a game changer.
Mm-hmm.
Yeah, cash flow for seniors is the biggest thing, right? So this is a very, very good tool to help them with their cash flow.
Absolutely. Stay liquid. And we've always heard the term, what was it? Equity rich, cash poor. So,
yeah, right.
But so the advantages are, I've seen many of my clients be able to downsize, or shall I say right size, either move closer to family, lower their cost of living during retirement. But it's been a tremendous help for my family personally.
Yeah. And so, what about AAG, Candace? What is, why did you decide to go work for AAG? I know they're one of the major, if not the biggest, company in this space.
Mm-hmm. So the reason why I've been with AAG for 10 years and decided to move forward, because I've been in the mortgage industry since 2001. I just seen the need to help the senior community, and I seen the commitment that our CEOs had towards the company. When I started with AAG, we were a team of about 60, and now we're maybe around 1,300. So we've grown tremendously. And I see the commitment and dedication that our CEOs have towards the program, and most importantly, the employees, of course.
Mm-hmm.
But, I could have easily hopped back into the forward world, but I definitely see, when you see the statistics are every day about 10,000 baby boomers retire in at 62, 65 range, right?
That's that's an incredible statistic.
Exactly. So
what was it? 10,000?
10,000 baby boomers
Are retiring every day?
Retiring and turning 65, 62,
oh, right. Okay.
that range. Mm-hmm, absolutely.
Got it.
And again, just look at, what's going on right now in our country, where, a lot of us are living under the median, right? So you're going to have baby boomers, number one, that cannot afford to retire. So you have folks that are working well into their 80s. And why, when you have the option to, tap into your equity and use it as a reliable source to help you comfortably retire, right? So this business, it's no longer going to be a niche product. It's going to pretty much be a necessity, right?
No, I agree 100%.
Mm-hmm. So this is why I'm committed to staying within the reverse mortgage space, because I know, we're doing great right now, but it's going to be longevity for myself, because I know the product's not going anywhere.
And I think too, a lot of people that have been in the business long enough remember, I certainly do.
Mm-hmm.
I do.
Mm-hmm.
The NEGAM, right? NEGAM loans, right? Everyone
Mm-hmm.
remembers. So NEGAM
Yep.
loans.
Yep.
And how, the kind of the financial collapse of 2008 or 2009, whatever year it was, there was a lot of blame put on the NEGAM loans. There's a lot of bad publicity. And granted, that was not the right tool at the right time in that space, as far as in my perspective.
Yikes.
I saw a lot of people buy homes with zero money. It was zero money down, and then they were getting a pick a payment option NEGAM loan. Mm-hmm. So there was no equity, and so right. it just doesn't work in that capacity. But I think that the tool it's a useful tool, especially when we're at all-time record highs in equity positions for people across the country. Mm-hmm. And this is where this product does really make sense. And when you see it applied, it is a very, very powerful tool, really, considering what the options that people over 62 and older what they can do with it.
Right. And the term NEGAM, that's like a taboo. That's like a no-no nowadays, right? but you're absolutely correct. This is a negative amortization product. But what a lot of our clients do is they send in payments over time to keep the balance at bay. This is in a scenario where they have children, and I don't know how old these children are when they're 17 years old, but let's say they have family living with them, and they want to leave, a limited lien amount for them to take over when they pass on. Absolutely, you can send in a monthly payment if you wish. The beauty is it's never required. You never have to worry about, late payments on your credit or NODs or foreclosures, right? So absolutely, you can send in any amount that you wish. You can send in interest only to keep the balance at bay.
Well, that's a really good point, because the flexibility, it really allows you, and maybe you come into a financial windfall you know, maybe you get an inheritance, or you know, the senior does, or something else happens, they get money, they can start paying into that that balance. And it's like I told my dad, I was like, because he has some annuities and he's got some things that, you know, come in based on it's really tied to the market. So when it's good, it's good. When it's not good, it's not good. And so I told him, I said, you know, these streams of income kick up for you, Dad. You can start just making a payment, and there's no penalty, there's no issue. You know, you're free to do it if you want.
Absolutely correct. Yeah. Mm-hmm.
So, well, I want to open it up to any questions. I know it's sometimes finance isn't the sexiest topic in real estate, but it you know, the key takeaway here is the fact is, baby boomers, you heard the stat, this is a massive opportunity in real estate, and understanding how we can help them use this product, it gives you an advantage as a real estate professional. And AEG, being someone who's been in the business for a long time, they have the credibility. They are very easy to work with from my standpoint. And if we have any questions about it, we'd love to, you know, open it up if there is any for Candace while she's here. Certainly, you know, you can direct them towards me after the webinar, and I can help filter through that as well. But is there any questions, Kev, or do you see it on the chat?
You know, I don't see any questions currently. Let's see. And you're right. And I think a lot of people a lot of agents are slightly intimidated because they just haven't seen it before. So, you know, I definitely encourage you guys to follow up and, you know, ask Bill questions, ask Candace questions, because this also could be something that you could even market to seniors, you know. So if you have a fairly good understanding of it, you could actually do some, you know, some Facebook advertisements or some kind of outbound marketing, and, you know, or even put this kind of a thing in your newsletter and educate your sphere of influence in your base.
That's a great idea, Kevin.
You know? So I know that there's no questions right now, but please, you know, use the resources that you have available to you, which is Bill Seitz, Candace Nelson, Kevin Lauren, Travis Brett, your entire ARG team, you know, so don't hesitate to reach out to us. And obviously what I'll do is when Candace, what I always do is I put out a replay of our webinars. And so I'll make sure I include your contact information as well as your cell and your email and all that good stuff.
Wonderful. Thank you.
Yeah, for sure.
Yeah, so thanks so much for coming on the webinar today, Candace. I really appreciate that. And you know, I think we try to tackle many different topics on our Wednesday trainings, and it's a place for all of us to get together and go through some of the stuff. And it's not always marketing. It's sometimes it's finance and compliance. So, you know, we give everyone a little bit of everything.
Yeah, no worries. And just keep in mind, this team is in the prime space for the senior community. Indio, Palm Springs,
Yeah.
La Quinta, all of it, you know, Southern California, even Orange County, here where I live, Rancho Cucamonga. What you're going to find is you're going to see an uptick in these reverse mortgages. So I'm happy to help in the event anybody has any thoughts, questions, or concerns.
Excellent, Candace. Well, thank you so much for being on the webinar with us.
Bill.
Oh, and Bill, thank you so much for your insight as well. Always appreciate it.
Yeah, no problem.
All right, great. Well, agents, thanks for coming on the webinar, and we look forward to having you guys on the webinar next week. Get out there and make it a productive week, and we'll see you guys next week.